In this presentation, we will enter the bank reconciliation for the first month of data that we have entered into QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in QuickBooks. We've got the open windows open. We've got the home page open. You can find the open windows at the View tab and the open windows list. We are now going to take our bank statement. So here is our bank statement. We're going to enter this information and tick and tie it out to what is in the QuickBooks system. Last time we discussed what that process will look like. Now we're just going to go in and enter this information or check off this information, reconciling the bank account. So we're back in QuickBooks. To do this, we're going to go to the banking dropdown. We're going to go to reconcile, banking and reconcile. We already entered this information last time. We have the checking account. We have the end of January. Beginning balance doesn't match. That's okay. That's what we're going to do in this system. And then we're going to say that the ending balance is 36,203. That then matches what's on our books here and on our bank statement here. And we're not going to do anything with the service charges or interest. This is what I would recommend as a standard. Then just continue. So here is our information. Now the first thing we're going to do here is I'm going to say that this 15,000 is going to be something we're going to have to deal with. And that's the first thing I kind of want to just check off. I'm going to check it off just as I would as if it was data down here, because that's going to make it easier for me to enter it directly into the QuickBooks system. So that's the first thing we would like to add. So to do that, I'm going to go back to QuickBooks and say I want to check off that 15,000 to take care of that difference. To do it, I'm going to go to the banking, use register, and that'll open up the register in the left side. And I'm going to enter this as of the beginning of the month. So I'm going to put it in there as of 01/01/19, January 1st, 2019. And I don't know what it is. I'm going to call it other. We can call it kind of like a deposit, but it's not really a deposit. It's the beginning balance that was in there before we started entering data. It might have been because the company had been doing business prior to this, or it might be just the initial investment that was input before we started entering the data. Doesn't really matter for us. We're not going to account for it on the income statement is the point. So I'm not going to say I don't know who put it in there. I don't know where it came from. It's probably an accumulation of multiple things. But we're going to have to put it in as a deposit, 15,000. It's not going to be revenue, and I don't need to know exactly what it is, because if you want detail about it, then you're going to have to go back to the prior books to find it. We're starting from here forward. Therefore, we don't want to put it on an income statement account. That's just the point. So if we scroll back up, we want to put it into some type of equity account. Now, if we were to enter the beginning balance the way the system would want us to, they would put it into opening balance equity, which is a nonsensical account. It's like a holding account. It's kind of like us putting the information into the uncategorized account. We would have to then move it out of there. That's why I would prefer just doing this automatically the way we're doing it here and just put it into equity. Equity is the balance sheet account. It's not part of the income statement. It's not going to affect net income. So I'm going to put it into equity and say, okay. And it's going to say you're hitting equity, retained earnings. That's unusual. I'm paraphrasing. And that's okay because for this particular transaction, we want to do that. So we're going to say, okay. And now we're going to go back to the bank reconciliation. And we could say that 15, that's the first thing I want to say that's done. So we've taken care of that beginning balance. Now note, if we have done that now we took care of the beginning balance and we've entered all the other information. If everything was done perfectly then, and if we check everything off, we should reconcile. What's in the books should match to what we have in the bank statement. So we could try to hit mark all here and see if it does what we want. But we're out of balance by 200. So there's a problem somewhere. So we got to go back through this manually, tick and tie everything out and see where that 2000 is or 200 is. So to do that, I'm going to unmark everything. And we're going to check off the 15 and then start from there. Now this should be a pretty easy and quick process, although it's a bit tedious. And if you have side-by-side screens or if you print off the information, you can check this off pretty quickly. We'll do it, just go back and forth fairly quickly on it. We're going to go to the deposits first. I'm looking for this deposit. Typically, you're trying to reconcile from the bank statement to the books. And so you don't really want to go both ways. You want to go, I'm going from the bank statement trying to find them in the books. And the reason that's typical is because it'll help you when you do more complicated bank statements that will have outstanding items. Because there's things on the books that won't be on the bank statement typically, although not here because of the way we're doing it. And so you always want to go from the bank statement typically to the book. So here it is on the bank statement. I'm going to go to the books now and look for that here. There it is on the books. So, okay, we check that off. Back to the bank statement. We found this one. I'm going to go ahead and select it, highlight it. I'm looking for this one, 1,207. And notice I have nothing else to go on here except for the deposit amount. And that's because that's all we entered in the system. That's all we had. And that's okay because it should tie out exactly. So we're looking for 1,207. So 1,207. And this should be fairly straightforward. So we'll go through this fairly quickly. 1030 is what we're looking for. 1030, there it is. So that one is there. We've got 910 and 910. We've got 1050, 1050. We've got, or 850, 1500. 850, 1,500, and then 50,000. I'm going to start doing this a little quicker. 50,000, 980, 980, 1,230, 1,230. And note we're looking for like that 200 difference. 1,230. Everything else should match out. 821 here, 821, then our 10,000, and our 640, 10,640, boom, boom, those are those two items. Now we can kind of check this off down here too because it'll sum this out. This is the 85,290 is what we've checked off, cleared balance, 85,290. If we go back to here, that's going to be the 70,290 plus the 15,000 beginning balance that we had to do for this first reconciliation. All right, and then we're going to go back. Now we're going to do the expenses. So here's the 400. This one we have a little bit more information. We got the check number and the date should match because we actually put the date in. And again, this is only the case if we use this system, if we entered the date directly from the bank statement, because if we hadn't, then the dates would differ. If we had written the check, in other words, from ourselves, then the date on the bank statement would be later than the date in the books. But since we used the bank statement to make it, then this date will match. So this is going to be 400. So we go back over here. We're on this side now. There's the 400. So we've got that item. And then we're looking for the 500. So Gibson 1002, 1002, 500 Gibson. So everything should match out in this format. So it should be really easy to do it because all we're checking is that our data input is correct. So here's the 12. Here's the 12, insurance, 1003. All that should match in this system. So we've got that. Let's do a few at a time. Here's the 4, the 598, the 9,000. The 4, the 598, and the 9,000. We'll just check all those off. Again, we could double check those side by side. Those are these three. Right click. Highlight 15, going back here, 15. So we'll check that off. And then we've got 360, going back, Verizon, 360. So there is that item. Next one, Epiphone, 600. And that one's 800 here. So there's our problem. So that's 1013 Epiphone that we entered in there on purpose as a problem, so we can see this. There's the 600 Epiphone. So that's just a data input error. We entered the wrong data in there. So that's okay. So now we're going to go in and fix that. Now to fix it, we could try to just double click here and double click on that, and that'll take us to the check. And then we could just change the amounts here, or we can go to the register, close that out. So here's this, and go to the check register for the date of 1/18. Check register on the left side. We're looking for the date of 1/18. and we're looking for that Epiphone on 118 for this 800, we want to make it 600. So I'm going to make that 600 and enter. And we're going to say save that change and then reconcile. And there's the 600. And that should do it. I mean, we could just check everything else off because that should be the 200 we found. But we'll just keep on going through here. We'll say, here's the 600. We got that now. We've corrected that. That's why we did the bank reconciliation. 60, 1050, 670. Here's the 60, 1050, 670. Again, we could check all these items off and they should check exactly because we took this information directly from the bank statement. And then we've got the 680, the 1,500, the 800, 680, 1,500, 800. We go back to the bank statement. Those have been found. Right click, highlight. 850, 3,539, and 630. Let's do that again. So it's a little bit out of order. So we've got the 800. 800's checked off. We've got the 850. So if we go back over here, Verizon should be 850 for, not Verizon, the Visa card for 850. So we found that. Right click and highlight. 3539. 3539 is here. So we find that. Go back over. There's the 3539. And then we've got the 630. Here's the 630. So we've got that. If we go back over, there's the 630. And then we've got the 300 and the 150. So the 300 and 150 were a little out of order because it's on order by the date. And then, of course, these others kind of threw them off in terms of the check order. So a 3 order and the 150. So note that could be possible. And you could change the order here by looking at by check number or by date. You can click here, go by check number or by date, whichever is easier for us to just follow through with the data input process. And notice this then goes down to 0, which is nice. I was worried that we'd have a rounding problem. So we're down to 0 here. That means it's reconciled. That means that the balance on that we have in our system matches exactly what's in the book. So the cleared balance here means what has cleared the bank matches what's on the books. Now again, this is only going to happen in a system where we're using this. If we were to actually use the full bookkeeping system where we entered checks into the system, we would have outstanding checks and therefore need to reconcile. So this reconciliation, again, very necessary. You want to do it so that we double check that we've entered everything into the system. However, not as effective as a bank reconciliation would be in a full bookkeeping process because it's only really checking against data entry error against entering checks into the system. It's not checking a double check. It's not like we entered all of these checks into the system ourselves and then the bank entered into their system and we're checking the two systems. That's not what's happening here. We just entered what's in the bank system into our system and checked that we entered their books correctly. So just keep that in mind because it's not the best process. However, it's a fast process that we can use to enter this data into the system, and reconciling will still be useful in doing that. So we're going to then reconcile now, and we'll take a look at our reconciliation reports. Typically there'll be 2 of them, and I'm going to want to look at both of them. So we'll display them and say OK. Now the reconciliation reports aren't going to give us anything outstanding here because really the reconciliation report is going to match the bank balance to the book balance. If we look at our bank balance, our book balance, let's go to Reports, Company and Financial, and go to the balance sheet as of 01/01/19, or I'm sorry, 01/31/19, January 31st, 2019. It's 36,203. If we go to our bank reconciliation summary in the open windows, then that should match. There's the 36,203, the cleared balance, which matches the register balance, meaning there's no difference between our balance and the register balance. So This is what in other words, this is the report that's actually called a bank reconciliation, but it's not really doing the job of a normal bank reconciliation because of the way we're doing the system. We're just entering the numbers from the statement into the bank. So there is no reconciliation item. We did the process of the bank reconciliation to make sure that we entered our numbers into the system properly. But the bank reconciliation report doesn't reflect anything because there are no outstanding items. This stuff up top is just really telling us what's already on the bank statement. That's already here. This is the cleared stuff. We already know that. It's not giving us any new information. The real reconciliation information is usually between these two items, which are the cleared items and the uncleared items. What's the bank statement and why does it differ from what's on the books? There is no difference because of the way we're using it. So we don't even really have to print out the bank reconciliation because it's not giving us any real information. But just note how this bank reconciliation format is and understand why it's not a useful bank reconciliation and why we are going through the bank reconciliation process even though we're ending up with a report that's not really a useful bank reconciliation. We're trying to save that data input process. Okay, so if we close this out, we have the detailed bank reconciliation. And again, it looks impressive, but all these checks are just the clear checks. So this stuff is all stuff that would already be here. We already have it on the bank statement, nothing new. The new stuff would be down here in the cleared transactions versus the register transactions, and there is no difference. They're exactly the same. So again, even though this one has more detail, it's really just showing us what has already cleared. What's on the bank statement, what's in our books, they're the same because we entered that exact same data in there. There's no difference between the two, which is really the heart of what a reconciliation report is. So just be aware of that. We'll close this out, and now we've entered this information, and we can now, if we look at our reports, our financial statements, we can be fairly certain that at least we've got the information that cleared the bank in our system, and all the checks that have cleared the bank are in there. We've checked that and we've double checked that. So from that standpoint, we can be fairly confident in our reports as of now. All we have to do now then is take care of those items that we had to put into the system, but we didn't know exactly what income statement account to put them to, and we'll take a look at that at a later time. For more accounting information and accounting courses, visit our website at accountinginstruction.info.